And hi, everybody, it's Tim Reazor, the Chief Investment Strategist here at Revere Asset Management, just after 6 o'clock on a Thursday night, a really busy Thursday night. So first, stock news. Before I get into it, because I've got a lot of stocks to cover with you, the first thing I want to tell you about is the Daily Market Insight tab. That's going to be your friend in the next couple of days, because those in the know that Donnie, Dan, and I, we tape the video podcast on Friday afternoons. It usually doesn't get uploaded to your email servers, your favorite podcasting software, or our podcast tabs until Saturday morning. Those in the know understand that I post the video podcast and Daily Market Insight Friday afternoon. Think 4 o'clock Central, 5 o'clock Central. It gets placed in there so you can start your research early. Now that you know that, please go in and watch it early if you have the opportunity. It's a way to get a jump start on your research. And speaking of your research, this is the Friday that Don does. Every other Friday, Don does this. He does the 21 over 21. And so you can find that. You can find that in the Daily Market Insight tab, but if for some reason you can't find Don's 21 over 21 stock watch list, which typically happens every other Friday, just email him, don@revereasset.com, because I'm telling you that list has been pretty much the Bible for how to succeed in stock markets in 2020, whether we've been in a bear market, whether we've come out of it to new highs. I'm telling you, that list has been treasure and a gold mine for those in the know, and thousands of people across the globe get that list every other Friday. They get it from Don and they're utilizing it to their advantage. And so I want you to be able to do the same thing. And so Don's got the video tomorrow night and the list comes out tomorrow. If you have any questions, take umbrage with anything I'm saying, all you do, email me, tim@revereasset.com. And this man right here, America's fiduciary, let me tell you something about Danny. He's been taking a ton of your phone calls of late. And the reason why is because a number of you are answering the call because you have had friends and loved ones sold life insurance and annuities as investments. They're not investments, friends. They're insurance products, and insurance products are not investments. And you didn't realize that there were other ways to insure risk than being sold a heavily fee-laden product that somebody's getting paid on every year at your expense. And it's sad how many people are taken advantage of. And look, if you have a form of life insurance that's just not term, and you think you might have been hoo-nangled, just that's a made-up word there. Just call Danny, 855-732-5932. Let me tell you something. We don't, whether you become a client of the firm or not, we want to help you. What's important is that we help you. We're here to just help individual investors any way possible. We're here to enable you to be more successful than what you are now. And so many things that we talk about on the podcast and these videos, they're not discussed openly because, look, I'm not one of the traditional advisor brotherhood. I'll never be one of those a-holes. I want you to be empowered to be able to fight that, okay? And so the only way to do that is to educate you about the truth. I don't need to be getting along with the get along crowd. I don't need to sell you. Our strategies speak for themselves. Our success speaks for itself. And the fact that we give away everything for free and try to make you as successful as we possibly could without ever trying to sell you anything speaks volumes, I think, about us. And if you want help, you need help, you would like the strategies of which we espouse and doing these videos for you, just call us, 855-732-5932. You'd be surprised how easy it is to become a client of the firm. And you'd also be surprised at how inexpensive it is. I'll tell you what, it's a hell of a lot cheaper than those insurance products those people are selling you. Now, if you want to text, like I got one right here. So this just came in. So if you want to text message with me, the closest thing to text messaging with me is this. Follow me on Twitter @TJ Reazor. And what I will do is I will follow you back. And so you can direct message with me anytime you want. I used to give away my phone number, but that was becoming a little arduous for me. So listen, don't be afraid of Twitter. Twitter is a great resource. It's where I'll post the video podcast as soon as I get it done, right up in here Friday night, so you can find it there if you can't find it on the website. And then you get great photos like this. Look at Nora, look at her. She's looking, she's like, oh my gosh, are those FANG earnings? She's like, what? Amazon, Facebook, Apple? That's exactly what she's saying. Nah, that was Thursday. This was Wednesday. When I think when Tanya took those pictures. I think it was Wednesday, maybe it was Tuesday. But I love Nora's expressions there. Nora is just a little over 3 months old. Hard to believe that little girl is 3 months old already. She is awesome. And so with that, my fellow stock owners and market lovers, these videos are for what? Your edification purposes only. They're never ever to be misconstrued as advice. If you want advice, if you need advice, if you seek advice, please, 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 just in fact, come right to the contact us page. 855-732-5932. And by the way, the complaint lines are always open. If you're an insurance salesman, an annuity sales bro, listen, you can always call and complain. I'd love it if you did. Here we go. Let's do the VIX. So the question should be for you right now: what gets you to sell? Like what happens what happens to make you want to sell stocks? Because look, if I look at the S&Ps here after hours up 0.5%, and I look at the Nasdaq up just about 1%, what gets you to want to lighten the load a little bit with some of the stocks you might have in your portfolio? It's the VIX futures, folks. And so maybe a weak close tomorrow. It could happen tomorrow. Don't think that tomorrow can't close ugly. Any day it's a market is a day that anything can happen. Remember that. And so we have all this momentum tonight after this great positive earnings in the biggest market cap stocks in the Nasdaq, and then for the most part the S&P. And yet anything can happen tomorrow. So just keep that in mind, especially on the backs of what? Horrible GDP, really not great unemployment claims numbers. And so look, but you got to understand, if you've been a bear in this market and you've missed this move from March, really April from March, you're investing off of emotion, and God bless the people that have been telling people to miss this. Just shame on them. And so the VIX futures, what gets me to want to lighten the load a little bit tomorrow? The VIX futures, if these VIX futures, and I've covered this, I'm going to cover this more again tomorrow, were to invert for some reason tomorrow, next week, the following week, you're going to see me start selling stocks. And why? Because that tells me that the elevated risk that I see in, say, something like the put-call ratio, which is not a timing mechanism, but a heads-up mechanism, that you shouldn't be alarmed to see a 1 to 5% sell-off, maybe even 10% initiated off of these very, very low put-call ratio readings. And I'm telling you, this is the kind of setup that led us into February, that at the end of February into March. It's the same thing. The story always ends the same. It's like, but when does it start? And so for me, putting that together, that's one piece of information. Remember, it's never one piece of information in a vacuum. It's an amalgamation of information. So you get the put call ratio giving you the heads up. And then if I were to say match that with some weak price action in the indices, and then I come over here to the VIX futures and I see that they invert, well, that tells me that risk is here, risk is now. And maybe, just maybe, I should be a little bit more careful in terms of how many positions I have. Batten down the hatches a little bit. Think about Katie barring the door, and get ready for a larger pullback than what you've seen since that big one in the beginning of June. Okay, so you just want to take that all in. But with all of that said, look, with all of that said, do I have a chart of the, I do. This is now turned into, this is still a 3 weeks tight, which is a super bullish pattern. If it closes like that tomorrow, that's a 3 weeks tight pattern. You've got the VIX here. We talked about this. This could just keep walking itself down. This is bullish, folks. It came back here and it, 3 weeks ago and checked, and there's nothing in the history that doesn't recheck to the mean, that's a 21. Checked it 3 times, and it gave you an opportunity from 36.2, and now you got 200 points higher. But that 200 points higher in the S&Ps is a tremendous big higher in a bunch of stocks. And so let's take a look at some of these. Let me take a sip of water here very quickly. So you already see the NASDAQ up. So the big ones, right? Like you're looking at Apple. Apple goes out at, fine support to 21 last several, like 5 days, right? And now Apple's trading at what? Give me a second. At 408. 408. Okay, I don't own a position in Apple for the shop, but I did do something. Let me show you. Let me see. What I do in Apple? Oh, I got filled on both of them. Oh yeah, I did the expected move. So I did the expected move to the upside, and I just did one at the money. So look, Apple's trading 408, and the expected move is 14. So it's beyond the expected move, but not by a lot. Now Apple could run tomorrow. Apple could absolutely positively run tomorrow, but I wouldn't be surprised if Apple comes back inside of the expected move, which would be around 400. And so it doesn't have to do that, but just understand that it can run. But Fridays are interesting. Do you want to How many people want to go long into the weekend? Do they want to hold Apple going into the weekend? I know there's a whole crowd out there that says don't sell Apple, just don't trade Apple, just hold it. But look, it's the market, and so the market could close Apple around the expected move, and it'll be really interesting to see that develop. Okay. And if you have questions on these iron flies, is what I call them. It's a straddle with wings for protection. And so that was in at the money. That was, look at that. That's not that much risk right there. That's what, $45 of risk. That's $50 of risk in something that's $5 wide. That probably that's $5 wide. So we'll see if this is the one that'll hit tomorrow. If it can pin somewhere between around 400, maybe you sell it, make half, make 250. And I show you these small trades because earnings season presents this opportunity all the time. And so Apple with the $14 move, it'll be interesting to see that. And so then you come and you say, well, what's the expected move? We say like Amazon. So Amazon has an expected move of what? 161, right? And so Amazon, it's what, trading just about that, right? A little bit, maybe just slightly more. Why can I not get that ticker box to clear for you? There we go. And so it'll be really interesting to see, like you see 145 overnight by the end of the day, 161, 100% implied volatility. So we'll see where Amazon, but 3,200 is where I kind of think Amazon settles in at. So it'll be really interesting to see how all these stocks react tomorrow. But if I take you to the charts and like an average true range chart, here's Apple. And so if Apple went up to 400, where would that place it? Right up towards that third ATR and a 1272 extension. That would be super interesting if it did that. If I show you Amazon, and notice where all these were. So here's the mean, right? Holding the mean. And if Amazon goes out at 32, here's 32, 3170, somewhere between the second and the third mean, challenging those old highs. Now, Amazon could run all the way back to old highs. I'm not saying it won't, but just know that these stocks are not extended. And that's what I'm trying to point out to you. They're absolutely positively not extended, especially Facebook. Facebook trading around 250. Where's 250 up here? Here's 240, 245. Oh, right here, 250 between that first and second ATR as Amazon was trading below the mean here. And so it'll be really interesting. But these stocks absolutely positively can run. Look at the Qs. The Qs were trading at the mean. And so when someone tells you that this market torn, you're going to hear this from the pundency. They're going to say this market extended is frothy. Well, look, we know, you know, I know what true measure of extension is. It's taking the average true range over 21 days from the mean, which is right here. And when it gets really extended, that third ATR, that's when you're really susceptible to a pullback. Can it happen at the 2? Of course it can, but look, you get in that zone of the 3 and then you give back the gains. And so the last time you did it, you gave back from 269. That's, we'll just call that what, 20 points, 25 points. And now maybe you work your way back. But to think that you really haven't, since the beginning of, like if we look at SPY, since the beginning of, here is June 8th, and S&Ps are trading, we'll just call that 327. Where's 327 here? There's 328, 326, 320. You're going to open up at 327. You really haven't gone anywhere S&P wise in a month, and that's why I think people are going to start gravitating from Vanguard indexing to individual stocks. That's why stock slices are so hot at Schwab and Fidelity and everywhere else that you can do fractional shares. It's because you're allowed to participate now. And then Apple is going to split 4 for 1, making it even more accessible because maybe they don't like the fractional share game. But it'd be super interesting. But look, there's other ideas out there that are working just fine. You just have to, I keep talking about this mean because you have to know how to buy them, and you just certainly don't have to wait for earnings to get the catalyst. Would I chase them here? Look, I can't. These videos are for your edification purposes only, but as you're nearing the third ATR, what do probabilities suggest? Yeah, that you're ready for a pullback. Can it consolidate? Can it continue to run? Like, look at Meritage here. Yeah, there's a third ATR 10 minutes. It sure as hell didn't pull back. Yeah, I get it. But do you want to initiate a position here, or do you want to let it flag out and try to give you that opportunity? Because, well, Tim, where did you get that Meritage Homes at? Well, where did I get that Meritage Homes? I believe 77 is where I picked up Meritage. And from 7, so, but look at the structure, right? There's the mean. You're working on a flattish base, right? And then it checks it again, and then away it goes. So Meritage is what? Meritage is like a 30% gain in a little less than a month. But what I do to reduce risk when I don't know, when I get two stocks that are similar size, or maybe the market environment isn't right for me, I use size as my weapon, right? So I bought a 2.5% position in Meritage. And then I also bought DHI at the same time, DR Horton. And so same day, but different results. And so DHI, here's the little flattish base, right? Buy it on 6.7. And then this is, look at that third ATR. It's trying to pull back there. This is only like a 17% gain, so much less than Meritage. When I can't figure out which one, they're fundamentally and technically similar to me, I buy them both at 2.5%, and then I get a 5% position. And then if one of them doesn't want to run, I cut it loose, and then I let the other one run. And so, but they both won, just not as much as the other one. And so, like, or take Shop. Like, if we look at Shopperoo, Shopify reported earnings yesterday. When did I pick up Shop? Just the 13th, I believe. It was just a little bit ago. So it was maybe here on the pullback. And then Shop, like this is a real choppy pattern, but I waited to what? I waited to the zone of the mean. And then you got this flat base, and now it did report earnings. And now Shop from the 13th now is just about a 10% gain. And the S&P is done 10% in the last week. So look, you need, what I'm trying to explain here is that you need a couple of things. You need a screening tool, right? That combines fundamentals and technicals. And for stock nerds and market lovers, that's why Don's 21 over 21 list is crucial to you. You need a screening tool that gives you some of the best ideas. And you can say, well, Tim, the names that are really running the names I know. Well, okay, great. But Don's list uncovers a bunch of names that you don't know. And that's why it's so invaluable. And then from there, 21 over 21, you got to wait and have patience to wait for your pitch in the mean. Okay. And understand that you have rules for buying and rules for selling. So when something doesn't work out, you just get out of it and move on. And so, by the way, like if I take this to a daily chart of old Shopify, it's not extended. That's not extended at all. Like, how about RH? Man, RH is nice here, man. RH, let's see, coiling. Pick this up at the end of June. And like, so here's look at this. Not quite, you're going to like, that's not the mean. No, I didn't wait for the mean. I saw the structure. I took it down to a smaller time frame chart. I wanted it, and I got it. And so right at the same time, right around, I was tracking the housing trade. Oh no, 7.6 is when I bought this. 7.6. Well, I guess it is the end of June. Right here. Right there. And so it continues on. No big deal. Checks back to the 21, well within my parameters. But my point is, do you buy it here? No, because let's just see, is that area off of earnings? Is that the third ATR? I'm not exactly sure if it is. Oh yeah, it is. Look at that, up off the third ATR, and just wait for that pullback. We're 7.6. Yep, right here, just a little bit above, right between the 1 and the mean. That's totally acceptable. So now you've got this beautiful structure for me. I really like this. And so we'll see if it can get up here to 300. That's what I'm looking for, but we'll see. Law of large numbers, maybe it tracks RH, but I really like the way that chart looks in a number of different time frames. And then GXCM, this just reported earnings. I really like this chart structure too. This is not extended either. It's at the mean. I'm trying to think of when I bought this. DXCM. I think I bought that back in June. And so, yeah, just having a time consolidating. And if you're looking like, yeah, has that big day, 446 down to 50, and now it's just reported earnings here a couple days ago. Now it's just coiling. I really like 5 coming through the 8, 21 holds. That's a low risk entry is what I'm describing to you right there. So look, the world doesn't have to be Amazon, you know, if you're looking for Netflix to explode higher, I don't know if it does. I mean, I wouldn't be surprised if it settled at 500 tomorrow with the move at the NASDAQ, or if it just did nothing. Like it's 488 now, And what you got to understand is when stocks make these big moves, let's get that off of there. When stocks make these big moves and then they report earnings and they kind of fizzle, they need time to rest. And so I guess the perfect time to be selling iron condors on. And you just do it with defined risk. But I'm not sure if Netflix really goes anywhere tomorrow. And what you want to do is you want to watch, does it keep running or does it settle back? Amazon. And that's not necessarily bearish. It's just, Tesla will be interesting. I think Tesla has a chance to settle at 1,500 tomorrow. Be really interesting to see how this all works out tomorrow. But look, we're going to go deep, 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 deep. And normally, the last 3 weeks when we've been doing the video podcast, we do some buying and some selling during it because some things are happening. And so you get to see the thought process. And hopefully that all is working for you. We love the feedback we're getting. We hope you're enjoying it. And look, it'll be up here later Friday afternoon. And so I'm just looking at my notes. I think I covered, did I cover the other indices real quick? They do like RTY for you. Yeah, it's great. We bought a double small cap ETF when it was closing above the 200-day. That's working there. How about the YMs? Yeah, holding above the 200-day. We'll see how that all works out tomorrow. And so, boy, look, we get what's happening with the economy and the disconnect. But what you don't want to do is you don't want to turn a blind eye to what you see in price. And a phrase that's helped me over the years is price before conviction. And so hopefully all this helps. We love you, stock nerds, and we can't say enough. We're having record downloads, record watches of all the content we put out, and that doesn't happen without you. So thank you. We love you, and we will see you at the next update.